Welcome to Mark Arnold's Finance. I got a unique, fun video for you guys today. We're going to be talking about the word if. Now, this word haunts us. It does, because think about it. How many times do you say, if I could have just done this, if I could have invested in that stock? So I want to put forth a hypothetical situation that will be fun for us investors, and there's a lesson to learn at the end. So before I get started, I'm going to be sharing my portfolio performance here in about 3 seconds. So if you appreciate that type of transparency, be sure to subscribe. So let's dive right in. My portfolio is now slightly improved. It was over 9% in the loss last time. Now it's down 8.1%. That's about $3,800 of unrealized loss. And you know, I'm from New Mexico, so this looks like a plate of enchiladas and you order Christmas. Christmas to us New Mexicans is half red chili, half green chili on our food, and that's what this looks like. I have companies in the red and companies in the green, but overall this portfolio has been holding up very well. And so let's get into this video. This is gonna be fun. Like I said, this is a hypothetical situation. I was talking to a friend about this the other day, and I thought, this would be a great video. And so the hypothetical situation that I was talking to my friend about is if we could go back to March 20th, 2020, the pandemic low, and know that we were given a set amount of money, how would we invest that? What companies would we choose? How many? So on and so forth. So I want to go over what I would do if I was given $50,000 on March 20th, 2020 to invest, knowing that that was the bottom, and the stipulation is you have to hold these investments for at least 10 years, at least 1 decade. So here's what I would do. I would first put $10,000 into Apple. Now, Apple to me is a high quality stock. They got a great ecosystem. They got sticky subscriptions. This company I feel will outperform for a long time. And what I'm going to show you with each company that I'm choosing to buy in this hypothetical situation is showing you the performance from that March 20th date till now. So Apple has gone up 144.33%. This stock is doing fantastic and one that I would have bought $10,000 worth in this situation. The next company I would buy is Costco. I would also put $10,000 into Costco. Costco is a company to me that is of high quality and one that does well during good or bad times in the economy. And so this would be a steady, sturdy investment for me that does outperform. We will see here, since that low of March 20th, it's gone up 70.54%. And that's 2.5 years. You grow your money 70.54%. That is definitely a very nice return, and Costco is one that I've told you guys many times, it's on my watch list. I think it's a little too pricey right now, but if I could have got back in at March 20th, 2020, I would have put $10,000 of my $50,000 total. So we got $30,000 left to play with. We just spent $20,000. The third stock I would buy is Vici. I would also put $10,000 into Vici. Now Vici is an experiential REIT, and they deal a lot with the entertainment side of things, so they have a lot of properties on the Vegas Strip. And you got to think of it in this aspect. People always strive to be entertained. And especially on the Vegas Strip, I feel Vegas is the world capital for entertainment, right? It's where people go to, and I don't see that changing in the next decade. So I am very happy, would be very happy to have invested $10,000 back then. It is a holding of mine, and I do have some money, and it's done very well for me. But if I would have invested $10,000 on March 20th of 2020, it would have grown 159.14%. So definitely some very handsome returns, and that's what I would do there. The next stock I would buy and put another $10,000 in. So we have $30,000. Now this is going to be another 10, so we're at $40,000. Would be Hershey. Hershey is, to me, a company that I got introduced to probably about 6 months ago. I did my own research on this, and I just love this company. They're more of a consumer staple company, in my opinion. These are products that I think people will buy regularly. In fact, let's look at some of their brands. You will see here, they're just not about the sweet side of things. They have the more savory side of things with the skinny popcorn, those Pocky chips, which I am addicted to. They're amazing. If you've never tried them, try them. But they have very solid brands here, and they're always expanding. So that's just something I like about Hershey. And then financially, they're an awesome company. I'll probably do a deep dive video on this one maybe within the next couple months, but it's one that's on my watch list that I'm really wanting to get into. So I'd put $10,000 into Hershey, and since that March 20 low, it's grown 97.28%, so almost 100%, which is awesome. So that leaves me with $10,000 left to spend in this hypothetical situation where I'm given $50,000, and the last holding I will buy is actually my favorite ETF, and that is SCHD, the dividend ETF. This stock has done well for me in my portfolio up to this point. I think I'm up 14%. So I had dumped the remaining 10,000 into this ETF, and it is up since that March 20 low, 85.72%. So let me put these up here. This is what I would do if I was given $50,000 on March 20th and told you have to buy and hold for 10 years. I would buy 10,000 of Apple, 10,000 of Costco, 10,000 of Vici, 10,000 of Hershey, and 10,000 of SCHD. So I'd have 5 holdings total, and I would be very proud of this portfolio. And you'll see here all the growths on the right. So let's pop in the S&P 500. The S&P 500 from that March 20th of 2020 low has grown 66.95% since then till this day, till present day. And you'll notice one thing about my holdings versus the S&P 500. The ones that I chose hypothetically, they're all beating the S&P 500. That is something that investors strive to do. They benchmark the S&P 500 versus their own portfolio, and even if people are trailing by a small margin, they're still extremely happy because the S&P 500 is a benchmark that is hard to beat. A lot of investors try to do it and fail, and so far I chose 5 holdings that are beating the S&P 500, and I feel they will continue to beat it. That's why I chose these in this hypothetical situation. Now I want to talk briefly about what investors might have done but wouldn't be a very good idea. We saw a lot of people pour into the spec small cap stocks, and that has proven to be disastrous. Let's just look at one in particular, and that's Carvana. Now Carvana, I'm going to bring up 2 charts. The first chart is going to show you that bought on March 20th, and by August 13th of 2021, this went up 1,129.91%. Massive gains. But if we stuck to the rules of this hypothetical situation, we'd still be holding this stock. And since that March 20th low, we are now down almost 75%. Ouch. There's this game that people like to try to play, and that's time the market, and that doesn't work. I guarantee you a lot of people at the height of this Carvana stock, after it started going down, they kept holding, right? Because no, it'll go right back up, and then it went down more. No, it'll go right back up, and then it went down more. That's the game we play in our minds, and this is a good example of a low-quality stock, a low-quality company that does not have good fundamentals or financial strength, and it's suffering because of it. And this stock can go all the way to 0. There's nothing that says it can't. So the lesson here that I want to kind of show you guys is you got to step into reality. I think we get too into our own box with our portfolio, and we get attached to these companies we buy, and we should not get emotionally attached. And a lot of people also get stubborn. I've done it myself. I've admitted it, where I've bought a stock and it makes loss for me, but I choose to hold on because I'm just sure it'll be in the green someday. But would I really want to hold on to that stock for the next decade versus other companies? Probably not. So I think what you guys should do is create your own list in this hypothetical situation and share it down in the comments. I'd love to hear it. If you were given $50,000 to invest on March 20th of 2020, what would you buy? You can buy as many holdings, or you can just buy one holding. It doesn't matter. I chose these 5 here, and this is their performance that they have had since then. And you may be saying, well, there's probably stocks that have gone up more. What I'm looking at is the long-term hold, the quality of the company, and I deem these companies quality. Now, there might be some other stocks that up to this point have outperformed, but will they at the end of that 10-year mark? That's what I'm looking for, and I feel these companies will provide that strength. So this exercise will allow you to pick these companies. Don't even look at your portfolio. Just do it as if you have never invested, but that you have the knowledge you have. And then look at your own portfolio and look what that story might tell you. Does your portfolio look like your dream portfolio? The quality stocks that you would have picked if you could have timed the low and had to have held for 10 years. This might help you choose and make some decisions based on your own portfolio going forward. It certainly has shined some light for me doing this type of exercise. For example, I hold AT&T. If I could go back, I would have never invested in AT&T. Now it's at a loss. I do think it'll get back into the green, which is why I'm holding on to it. But that's a stock I will definitely exit because it's just a low growing stock. Management's made bad decisions, so on and so forth. So as you go through this, ask yourself, why would I choose these stocks? For example, Apple. Why would I choose Apple? And I gave you guys a reason. High quality, great, huge ecosystem, sticky subscriptions, very popular products that people will continue to buy over and over because it's just a good product. I'm a buyer of Apple and will always be. Same thing with the rest of the companies. Like I said, they provide products that people want. They have good financials. Their fundamentals are good. These are good companies and they've outperformed the S&P 500 in the last 2 years, and I think they will over the next decade. And that's how we should be choosing stocks for our portfolio. So I hope this helps you guys put things in perspective in a different way. You can do this exercise and share that with me, but it also gets you to kind of look at your own self because, again, I think we get in this stubborn view of our portfolio, and you need to be willing to be open, take the emotions out, and look at it and be able to critique yourself. And that's what I'm doing. And obviously, I don't hold Apple, I don't hold Costco, and I don't hold Hershey. I definitely want to eventually, but I do hold Vici and SCHD, and they're doing great for me. So that's what I want my portfolio to contain, are good high quality stocks that I would be very content holding over the next 10 years, that I have a strong outlook on them and think they will beat the S&P 500. So with that said, I hope you guys enjoy this video. Be sure to share your picks in this hypothetical situation. Here's 50 grand. On March 20th, what would you buy? Share down below. Let me know if you agree with my picks or disagree. And with that said, be sure to subscribe to my channel. Thank you everyone who has. Be sure to have a great day, and we'll see you next time on Mark Arnold's Finance.